Welcome back to Doc Tickers. It's November 1st, 2024, and we're diving into NVENT Electric's Q3 earnings call. The ticker is NVT for those following along, and the market didn't love what it heard. Shares closed down 8.44%.
Yeah, I'd say that qualifies as a rough day.
Yeah, rough day for NVENT, for sure.
Yeah.
So we got to figure out, what happened and what it means for, anybody who's holding NVT or thinking about it.
Definitely. I'd say it was a mixed bag, this earnings call. I mean, on the one hand, they posted record sales, $782 million.
Which is a 9% jump from last year, so that's impressive.
9% growth in this economy. A lot of companies would kill for that.
Exactly. But then on the other hand, adjusted earnings per share, it actually dipped a little bit. Came in at $0.63.
Ah, okay. So that earnings dip is probably what's spooking the market. And it's a good reminder that top line growth, revenue, it's not the whole story.
Exactly right. But before we get too deep into the weeds, I think it's important to step back and look at the bigger picture here, right? NVENT has been making some pretty significant moves strategically, selling their thermal management business and acquiring TrackDi.
Yeah, those are big moves. NVENT's really they're reshaping their portfolio. And I think by shedding thermal management, they're saying, look, we're really focused on becoming a leader in electrical connection and protection. And that's a pretty smart bet on some big trends that we're seeing: electrification, sustainability, digitalization. I mean, these are not going away.
Right. They're not fads. And that thermal management sale generated a lot of capital too, right? I think it was around $2 billion, if I'm remembering correctly.
Yeah, you've got a good memory. It was right around there. And that's a lot of dry powder, for acquisitions, investments, maybe returning value to shareholders. Gives them a lot of options going forward.
Yeah, for sure. So let's break this down a little bit, starting with the financials. Record sales are a definite positive. But what caused the dip in earnings even with that sales growth?
Well, higher interest and tax expenses played a role, unfortunately. Those factors seem to be kind of outweighing the benefits of the sales growth, at least for now, in the eyes of the market anyway. However, there is some good news kind of tucked away in the report. NVENT generated $143 million in free cash flow, and that's a 33% increase year over year.
Oh, wow. That's a really healthy sign, isn't it? It suggests that they're efficiently converting those sales into cash and really managing their working capital well.
You got it. Strong free cash flow. It's crucial for any company that wants to grow in the future, whether that's through acquisitions, internal investments, whatever. It gives them the fuel they need to make their strategy happen.
Yeah, it's the lifeblood of a growing business. All right, so let's zoom in a little bit now and look at how each of their business segments performed. Now, as you know, they're divided into two main segments: enclosures and electrical and fastening solutions, which is called EFS.
Yeah, that's right. And enclosures really led the way this quarter. Driven in large part by that TrackDi acquisition, they saw double-digit sales growth.
Wow, double-digit.
Yeah, it's really making a big impact already. It's worth noting, too, that the integration seems to be going pretty smoothly, which is always a concern when you're talking about acquisitions.
Right, you got to make sure all the pieces fit together.
Yeah.
So TrackDi is looking like a real star performer right out of the gate. What about EFS?
Well, they returned to growth this quarter, which is good news, driven mostly by the industrial sector. But I'd say overall, it's infrastructure that's really the powerhouse for NVENT right now, especially data solutions and power utilities.
That makes sense. It aligns with their strategic focus on, everything getting electrified. Let's talk about TrackDi a bit more, because it seems like they're really doubling down on those larger scale enclosure solutions, especially for utilities, renewables, data centers, all that.
Yeah, I mean, think about it this way. As the world electrifies, we need more infrastructure, right, to support all that. Think renewable energy projects, the expansion of the power grid, all the data centers that power our digital lives. I mean, all of that requires robust, reliable enclosures, and that's TrackDi's bread and butter.
Right, and it's not just about the product itself either, is it? I mean, TrackDi brings existing relationships and expertise in these specific markets, right?
Absolutely. NVENT gets instant credibility and access just through that acquisition, which is so valuable in these competitive sectors. It's like a shortcut to getting a stronger foothold in these key markets.
Makes a ton of sense. So Trax fits right into NVENT's vision of being a leader in all things electrification and digitalization. Let's shift gears a little bit now to talk about that other big move, the sale of the thermal management business.
Yeah, that's a big one. That move, it really underscores their commitment to this really focused strategy. It's like they're saying, we're laser focused on electrical connection and protection, and we're willing to let go of even good businesses, profitable businesses, if they don't fit that vision.
It is a bold move, especially when you consider that the thermal management business was actually generating solid profits. So what message are they trying to send to investors with a move like that?
They're saying, we're disciplined, we're thinking long term. They're streamlining their operations, sharpening their focus, and they're freeing up resources so they can invest in areas with even more growth potential.
Yeah, it's a sign that they're willing to make those tough decisions to maximize shareholder value down the line, even if it means, maybe some short-term adjustments along the way.
Speaking of short-term adjustments, one of the analysts during the Q&A actually asked about the margin outlook. It sounds like operating margins might actually be down sequentially in Q4. Is that something investors should be worried about?
Well, NVENT's CFO, Sarah Zawiski, she addressed that directly, and she explained that, the sequential dip, it's mostly due to seasonality in their EFS segment. Q2 and Q3 tend to be their strongest for that part of the business, so a little dip in Q4 is expected.
Okay, so not necessarily a red flag then.
Not necessarily.
Yeah.
Zawiski also made a point of saying that they're making significant investments, especially in their data solutions business, and that could, temporarily impact margins, but it should ultimately drive growth in the long run.
Short-term pain, long-term gain kind of thing.
Exactly. Which brings us to what could be the most interesting part of this whole story, data solutions. NVENT is projecting over $575 million in revenue from data solutions in 2024. I mean, that's remarkable, isn't it?
It is, especially considering, everything else that's going on in the economy right now. But data solutions are at the heart of this whole digital revolution that we're living through. And NVENT, with their expertise in liquid cooling, they're positioned to play a key role.
Yeah, let's dig into that a little bit more. Why is data solutions so critical to NVENT's future?
Right, so let's unpack that. Data solutions, it's a huge opportunity for NVENT, and all their recent moves suggest that they're all in on it. I mean, data centers are becoming the backbone of everything. They process and store massive amounts of information, and, as they get bigger and more complex, they generate a ton of heat. And, traditional air cooling systems, they're just not cutting it anymore.
So they're struggling to keep up with the demands.
Yeah, I mean, think about it. Artificial intelligence, high-performance computing, and just the sheer volume of data that we're generating every second. Air cooling, it's just not as efficient.
Right. So that's where NVENT's expertise in liquid cooling comes in. I mean, these systems, they're designed to handle those really high temperatures, right? Allowing the data centers to operate at peak performance without, melting down.
Yeah, it's kind of like it's like trying to cool a car engine with a, like a little handheld fan versus a, sophisticated liquid cooling system. Liquid cooling, it's way more efficient and way more effective for high performance applications.
It's the right tool for the job. And it's not just about keeping things cool either, right? NVENT is also really focused on doing it sustainably.
Oh, absolutely. Sustainability is a huge factor in data center design these days. Liquid cooling uses way less energy than traditional air cooling, so you're reducing operating costs and you're reducing your impact on the environment.
It's a win-win. Now, NVENT also highlighted their multi-generational product designs during the call. What does that mean exactly?
So basically it means they're designing these liquid cooling solutions to be adaptable. They want them to be compatible with future generations of technology. So as data centers evolve and computing power gets even more intense, NVENT systems can, they can grow and adapt right along with them.
So they're future-proofing them.
Exactly. It saves everybody a lot of headaches and costly overhauls down the line.
Smart. Now, we can't talk about data solutions without talking about NVIDIA, right? NVENT mentioned this partnership with them to co-design liquid cooling solutions for their AI chips.
Yeah, that's a big deal for NVENT. I mean, NVIDIA is the leader, right, when it comes to AI hardware. Their chips, they're powering everything, self-driving cars, medical research, you name it. So for NVENT to partner with them, it puts them right at the forefront of a really exciting, really fast-growing market.
Yeah, they're hitching their wagon to a star, that's for sure. And they're investing heavily in this space. I mean, they're quadrupling their liquid cooling capacity.
They're also doubling their lab capabilities. And they're pouring resources into R&D so they can stay ahead of the curve. They get it. In data solutions, you got to keep moving. You got to keep innovating.
Absolutely. Now, NVENT was a little bit quiet about the specifics of that NVIDIA partnership during the call, but they did say they're going to be showcasing some new solutions at the supercomputing event coming up.
Yeah.
What do you think we can expect to see there?
Well, I think we'll get a much better idea of just how closely NVENT is working with NVIDIA. We'll probably see those co-designed solutions for those really advanced AI chips, maybe even a whole new generation of liquid cooling tech, something that really pushes the boundaries of performance and efficiency.
Sounds like it's going to be a can't-miss event. And, it's not just about these big partnerships either. NVENT is also broadening their customer base in general.
Right. They're not just focusing on those massive hyperscale data centers. They're also developing solutions for those smaller enterprise clients. It's smart to diversify their revenue streams.
It's all about capturing as much of that market as they can. I mean, that $575 million revenue projection for 2024, it really highlights how fast this segment is growing and how strategically important it is for NVENT.
Absolutely. Data solutions, this is their growth engine, especially while some of their other markets are a little shaky, right? Data solutions are carrying the load, driving their growth story.
It's impressive how they're navigating the current economic conditions, for sure.
Yeah.
I mean, we've talked about the slight dip in earnings and those global uncertainties, like, how distributors are managing their inventory.
Yeah.
But even with those challenges, they're projecting strong growth for 2025. And they're basing that on their backlog, right? Particularly in data solutions and power utilities.
Yeah, and that backlog is key. It shows that there's still a lot of demand for NVENT's products, especially in those growth areas. So, yeah, distributors might be cautious right now, but the underlying demand, that tells a different story.
Like a pause before things really take off again.
Yeah.
So how is NVENT addressing those concerns about distributors being cautious with inventory?
Well, communication is key. They're talking to their distributors constantly, keeping a close eye on things, and adjusting their production and their supply chain based on what they're seeing.
So they're staying agile.
Exactly. And they're also emphasizing their sellout through distribution, meaning that the products are actually moving off the shelves and getting into the hands of customers.
Just for our listeners who might not be familiar with that term, sellout basically means the rate at which the products are actually sold to end users, right? As opposed to just sitting in a warehouse somewhere.
Exactly. So even though there might be some fluctuations in distributor inventory, the actual demand for NVENT's products is healthy.
They're not just sitting on a pile of unsold inventory.
Yeah.
So they're acknowledging the reality of the situation, but they're also highlighting the positive underlying trends.
Yeah, it's a delicate balance.
For sure.
And it's important to remember, too, that even when you have strong underlying trends, external factors can still have an impact. That's just business.
Especially in this global economy. So if you had to boil it all down, what's the main takeaway for investors?
NVENT is a company in transition. They're making big, bold moves to position themselves as a leader in electrification and digitalization. And they're not afraid to make those tough calls to get there.
So they're getting rid of what they see as non-core assets and doubling down on those high-growth areas like data solutions.
Yep, and their free cash flow, their balance sheet, it gives them the flexibility they need to make that happen.
And that backlog, particularly in data solutions and power utilities, that suggests they're in a good spot for growth going forward.
Even with the bumps in the road.
A story of transformation, adaptation, and a laser focus on the future. Okay, so before we wrap up with our final thoughts for investors, let's take a minute to consider some of the potential risks and challenges NVENT might face in the coming quarters. I mean, we've covered a lot of ground here. This deep dive into NVENT's Q3 earnings call. We've seen, exciting growth, but we've also seen some potential challenges ahead too.
Yeah, it is a lot to take in, but I think we can distill it down to some key takeaways for investors, right?
Absolutely. So let's try to do that. First and foremost, NVENT, they're in the middle of this big strategic transformation. They're moving away from that more diversified industrial portfolio, and they're really focusing in on becoming a leader in electrical connection and protection, especially in those areas we talked about, like, data solutions and power utilities.
Right, they're really aligning themselves with those big mega trends: electrification, sustainability, and digitalization. I mean, those aren't going anywhere. Those are going to keep growing for years to come.
And they're not just talking about it, they're actually, putting their money where their mouth is, investing heavily in capacity expansion, R&D, strategic partnerships, all those things, especially in data solutions.
Yeah, I mean, you look at the acquisition of TrackDi, the sale of the thermal management business. Those are bold moves, right? But they show that NVENT is willing to do what it takes to position themselves for the future, even if it means letting go of some businesses that, are doing fine or profitable, but they don't fit that long-term vision.
Right. It's about being strategic and focused.
Yeah.
And they're in a good spot financially to do that. Strong free cash flow, $2 billion in capital from that thermal management sale. They've got a lot of options.
Yeah, lots of flexibility to keep investing, whether that's organic growth or more acquisitions. But, it's not all sunshine and roses. We got to be realistic, right? They're not totally immune to what's happening in the economy right now. That little dip in earnings, distributors being cautious about their inventory, those are all reminders that even the best companies can be affected by outside factors.
Yeah, no one's operating in a vacuum. But even with those challenges, that backlog, especially in data solutions and power utilities, that's a really positive sign. It suggests they're on track for long-term growth.
That backlog is a great indicator of future demand, for sure.
Okay, so for investors who are listening to this, trying to make sense of it all, what should they be watching for as we go forward?
Well, I'd say keep an eye on how they execute in that data solutions market. How are those partnerships with companies like NVIDIA playing out? Are they gaining market share? Are they turning that growth into profit?
Right. And how about those macroeconomic challenges? Can they navigate all the uncertainty around interest rates, elections, all of that without it affecting their growth plans?
And then there's that big pile of capital they're sitting on. What are they going to do with it? More acquisitions, return value to shareholders through buybacks or dividends. Lots of possibilities there.
Those are all really great points. But here's one final thought I want to leave investors with. NVENT is going all in on liquid cooling for data centers, right? But what if this technology, what if it gets so good, so cheap, that it completely changes the game? Like, what if it disrupts the entire data center model as we know it?
That's an interesting thought. If they can really bring down the cost and the complexity of liquid cooling, you could start to see smaller, more decentralized data centers, maybe even at the edge of networks. That would be a huge shift in how we process and store data.
Exactly. So this isn't just a company selling, pipes and fittings. They can be a real disruptor, a company that shapes the whole future of the digital world.
Yeah, NVENT is definitely a company to keep your eye on. They're on an interesting journey, that's for sure. And the next few quarters are going to be crucial.
We'll be following along, of course, and keeping our listeners updated. And that, my friends, wraps up our deep dive into NVENT Electric's Q3 2024 earnings call. Ticker symbol NVT. Thanks for joining us here on Talk Tickers.
As always, stay informed and invest wisely.